Hello everyone, John AG here. Welcome back to my channel, Aurex. If you haven't yet subscribed to my channel, in this channel you will find the real information, real market updates that everyone cannot tell you. So please subscribe this channel and love you all of my subscribers for your support. And please watch this video till the very end because YouTube will not push my videos to more people. Today is May 23rd, 2026. I want you to stop whatever you are doing for just a moment and look around you. The world you thought you understood, the financial architecture that you were born into, the very definition of the money sitting in your bank account, all of it is actively being rewritten right in front of our eyes. The rules of global finance, the stability of the currency in your pocket, and the geopolitical world order that has dictated our lives for the last half-century are shifting beneath our feet at a velocity that is leaving even the most seasoned Wall Street veterans completely paralyzed. We are living through a profound fracture in economic history. We are going to look back at a very specific date that solidified this paradigm shift, March 5th, 2026, and we are going to deeply examine the absolute, unadulterated surge in gold and silver that has left retail investors utterly confused, institutional players scrambling for cover, and central banks hoarding physical assets like there is no tomorrow. Because for the fiat system as we know it, tomorrow is looking increasingly and undeniably grim. This is not a broadcast designed to incite panic. Panic is the reaction of the uninformed. This is a documentary of absolute reality. This is a story about the immense, devastating human cost of endlessly printed money. It is a story about the desperate, high-stakes geopolitical chess match currently playing out in the burning sands of the Middle East. And above all, it is a story about the ancient, indestructible, and undeniable truth of precious metals. Make yourself a coffee, sit down, clear your mind of the mainstream media noise, and listen very closely. This is the raw market snapshot they absolutely do not want to broadcast on primetime television. Let us begin by dissecting the grand illusion. For years, decades even, we were sold a carefully crafted narrative by the people in power. We were told, with a straight face, that inflation was merely transitory. We were promised that the central banks of the world, led by the Federal Reserve, had their macroeconomic levers so perfectly calibrated that they could engineer a painless, soft landing out of the greatest monetary expansion in human history. We were lectured by academic economists that sovereign debt, no matter how astronomical, no matter how mathematically impossible to repay, was merely a number on a digital spreadsheet, infinitely manageable just as long as the printing presses never stopped running. But reality has a devastating, inevitable way of catching up to fraudulent arithmetic. By the time we crossed the threshold into the first quarter of 2026, the microscopic cracks in the dam were no longer something that could be ignored or papered over. They were gushing torrents. Gold had already shattered the once unthinkable $5,000 ceiling in late January, peaking at a staggering $5,589 per ounce. Silver, the long-suppressed giant, had exploded to an astonishing $116 per ounce. And while we subsequently saw a brutal, highly orchestrated period of consolidation, with paper markets and algorithmic trading desks violently trying to correct the price downward to maintain the illusion of dollar supremacy, March 5th, 2026 stands out as the critical psychological marker in the timeline of this unfolding financial crisis. On that specific Thursday, we witnessed a profound and historical disconnect. Paper prices on the COMEX were under intense, almost desperate algorithmic pressure, yet the physical demand, the actual, tangible transfer of heavy metal wealth from weak, paper-believing hands into strong, historically aware hands was accelerating at a terrifying pace. On March 5th, we saw local bullion markets across the globe experience wild, unprecedented premiums. The physical product was utterly detaching from the paper spot price. The undisputed truth of March 5th is this. It was the exact moment the smart money collectively realized that the pullbacks were not a sign of fundamental weakness in gold and silver. Rather, they were the final, desperate gasps of a dying fiat currency system desperately trying to assert a dominance it no longer truly possessed. Why did this massive psychological shift happen? Because behind the heavy velvet curtain of the daily stock market tickers, behind the cheerful talking heads on financial networks, the underlying unvarnished fundamentals of the global economy were screaming a warning. The World Bank had just issued a commodities report that sent ice-cold shivers down the spine of every single macroeconomist paying attention. They projected a massive 42% surge in the precious metals index for the year 2026. I want you to internalize that number. Not a 5% gain to match a bond yield, not a 10% hedge against consumer price inflation, a 42% structural revaluation of what constitutes real, actual money on this planet. This is not the speculation of a fringe analyst. This is a quiet, terrifying admission by one of the most powerful and conservative financial institutions on Earth that the fiat ship is taking on water far faster than the central planners can bail it out. To truly comprehend the violent surge in gold and silver, you must first understand the aggressive, terminal cancer that is eating away at the very bedrock of the global economy: sovereign debt. As of the early months of 2026, the United States national debt careened past the unthinkable, almost comical milestone of $40 trillion. Let that gargantuan number sit heavily in your mind for a moment. $40 trillion. The human brain is simply not evolved to comprehend a number of that magnitude. It is an abstraction. Let me ground that number in reality for you. If you were to spend $1 million every single day without fail since the day Jesus Christ was born, you still would not even be remotely close to spending $1 single trillion, let alone 40 of them. The interest payments alone on this suffocating mountain of debt have now violently eclipsed the entire national defense budget of the United States. We have officially crossed the event horizon of a debt trap. We are now borrowing freshly printed money for the sole purpose of paying the interest on the money we already borrowed yesterday. This is the textbook mathematical definition of a sovereign death spiral, and I assure you, the central banks are acutely aware of it. They are currently trapped in a completely inescapable two-front paradox. If they choose to aggressively raise interest rates to fight the sticky, persistent, soul-crushing inflation that is currently starving the working and middle classes, they instantly bankrupt the government, because the interest obligations on that $40 trillion become mathematically unpayable. However, if they choose to lower interest rates and turn the liquidity printing presses back on to service the debt and bail out the bond market, they will instantly ignite a hyperinflationary firestorm that completely destroys the purchasing power of the currency itself. They are utterly cornered. There is no magical policy tool left. There is no mathematical escape route. This inescapable reality is exactly why legendary macroeconomic titans like Pierre Lassonde and others are now openly, seriously discussing a gold price of $17,250 in the coming years. It is not because gold will miraculously become vastly more useful. It is simply a matter of fractions. When the denominator, the US dollar, goes to infinity through endless unbacked printing, the numerator, gold, must rise exponentially just to maintain baseline equilibrium. The breathtaking surge we saw coalescing around March 5th was the global market collectively waking up and doing this grim math. It was the visceral realization that the dollar's purchasing power is not just slowly eroding due to mismanagement, it is being systematically, purposefully targeted for debasement in order to liquefy and inflate away the greatest debt bubble in the entire history of human civilization. Yet debt and monetary expansion are only half of this terrifying story. The other half is the violent, rapid fracturing of the geopolitical world order, a dynamic which is currently serving as high-octane rocket fuel for the precious metals market. In the first quarter of 2026, we witnessed an inflationary energy shock that rivals, and in many critical ways vastly exceeds, the catastrophic Arab oil embargoes of the 1970s. We have watched with bated breath as Brent crude nearly doubled, leaping violently from $61 to $118 per barrel in a matter of mere months. Liquid natural gas costs surged by an agonizing 59% in Europe, crippling their industrial base, and a staggering 94% in Asia. Why is this happening? Because the world is effectively at war, and the primary battlefields of this new era are the global energy choke points. The escalating conflict involving Iran has dangerously and predictably spilled over into the broader Middle East, effectively choking off the Strait of Hormuz. For those who may not understand the gravity of this geography, nearly 20% of the entire world's daily oil consumption flows through that one narrow, highly vulnerable waterway. When automated drone swarms and ballistic artillery attacks consistently target critical energy installations and commercial shipping in the Gulf states, it does not just mean that you pay a few extra dollars at the local gas pump. It means that the fundamental cost of manufacturing, the cost of commercial agriculture, the cost of global transportation, and the cost of basic human survival absolutely skyrockets. This is the demon known as stagflation, manifesting in its purest, most brutal, and most unforgiving form. Economic growth is violently stagnating, businesses are shuttering, and yet, simultaneously, the cost of living is raging out of control. The World Bank, normally conservative in its public estimates, recently revised its inflation forecast for emerging market and developing economies to a staggering 5.1% baseline for the year. This is not a theoretical academic problem to be debated in university halls. This is a deeply, profoundly human crisis. Consider the domino effect when global energy prices violently surge. First, food prices explode because modern agriculture is, at its core, effectively the mechanical process of turning hydrocarbon energy into human calories. Tractors require diesel, fertilizers are derived from natural gas, and distribution networks rely on fuel. Second, intricate global supply chains completely break down because the cost of shipping manufactured goods across vast oceans suddenly becomes economically unviable. Third, and most tragically, the working class is absolutely crushed underneath the weight of it all, because their hourly wages do not, and mathematically cannot, keep pace with the violently rising cost of the most basic daily necessities. In times of profound geopolitical instability, kinetic war, and energy-driven hyperinflation, humanity has always, without fail, retreated to a single, historically proven, unshakable safe haven. They retreat to the one asset that has successfully survived the fall of empires, outlasted countless fiat hyperinflations, and intrinsically carries zero counterparty risk. They retreat to the safety of gold. While the mainstream financial media complex was busy distracting retail investors with the daily, meaningless fluctuations of overvalued tech stocks, algorithmic trading glitches, and the carefully crafted illusion of a resilient, robust economy, the smartest, wealthiest, and most powerful entities on the entire planet were quietly, methodically executing the greatest wealth transfer in modern history. I am talking, of course, about the global central banks. In the first quarter of 2026, global central banks purchased a net 244 tons of physical gold. This is an incredible, almost desperate acceleration of accumulation, vastly exceeding both the prior quarter's staggering numbers and the 5-year trailing average. And here is the most critical, paradigm-shifting detail that you absolutely must understand. They were buying this massive tonnage at absolute record high prices. When the London Bullion Market Association gold price averaged a previously unthinkable record of $4,873 per ounce, the central banks did not flinch. They did not pause. They did not wait for a technical dip or a market correction. They aggressively, relentlessly converted their fiat paper reserves into physical, unencumbered gold bullion. I want you to ask yourself a very simple, profoundly logical question. Why would the exact same sovereign institutions that possess the legal monopoly and power to print fiat currency out of thin air be so desperately eager to trade that very currency for physical gold at all-time high prices? The answer is chillingly simple. Because they know exactly what is coming. They know that the multi-decade era of the fiat US dollar serving as the unchallenged unipolar global reserve currency is rapidly and permanently coming to an end. Sovereign nations across Asia, the Middle East, and the rapidly expanding BRICS bloc are actively, openly de-dollarizing their economies. They are flatly refusing to continue holding the sovereign debt of a Western nation that currently owes $40 trillion, prints money recklessly, and routinely weaponizes its financial clearing systems through devastating economic sanctions. Instead of trusting paper promises, these nations are rapidly building a completely new global financial architecture, one that is firmly based on tangible, unprintable Tier 1 assets. Gold is the ultimate geopolitical veto. It is the only financial asset on a sovereign balance sheet that is not simultaneously some other nation's liability. When a central bank aggressively buys physical gold, they are not speculating on price action. They are buying financial sovereignty. They are frantically building a metallic life raft for the exact moment when the massive fiat ship inevitably and violently sinks beneath the waves of hyperinflation. The intense market action we witnessed around the March 5th timeframe was a microscopic, highly concentrated view of this massive macroeconomic reality playing out in real time. While massive paper price manipulators on the futures exchanges desperately tried to force the spot price down to shake out weak retail investors and trigger stop losses, the relentless, insatiable physical demand from massive sovereign wealth funds, central banks, and completely insatiable Eastern retail markets acted as an absolute impenetrable floor. The physical market is violently breaking free from the manipulative chains of the paper derivative market. If gold is the ultimate wealth preservation vehicle of sovereign nations and central banks, then silver is the raw, beating heart of the modern industrial world. And the incredible story of silver in 2026 is, without a shadow of a doubt, the most explosive, deeply asymmetrical financial setup of our entire lifetime. While gold has made incredible, historic strides, silver has been the true wild outlier of the financial system, surging well over 120% year-to-date at its absolute peak, violently exploding past the $100 barrier to briefly touch an astonishing $116 per ounce before settling back into a deeply volatile, nerve-wracking consolidation zone. But I warn you, to look at silver merely as poor man's gold or a simple monetary metal is a fundamental, potentially catastrophic misunderstanding of the modern technological world we live in. Silver is currently experiencing a massive structural paradigm shift that has absolutely nothing to do with monetary safe haven demand and absolutely everything to do with a catastrophic, unfixable physical supply deficit. We are currently suffering through the sixth consecutive year of a severe physical market deficit for silver. I need you to understand what that actually means. It means that for 6 straight years, the industrialized world has consumed vastly more physical silver than the global mining industry has been able to pull out of the ground. Massive, above-ground stockpiles that took decades to build are currently being depleted at a frightening, unsustainable rate. Why is this happening? Because the entire unstoppable global political push toward green energy and total societal electrification is entirely 100% dependent on the unique properties of silver. Consider the vast fields of solar panels being constructed globally. Photovoltaic cells require immense, irreplaceable amounts of highly conductive silver paste to function. As sovereign nations legally mandate the transition to renewable energy sources, this singular source of solar demand is completely draining the global silver market dry. Consider the explosion of electric vehicles. A modern electric vehicle uses significantly more silver than a traditional internal combustion engine vehicle. Every single high-voltage electrical connection, every autonomous driving sensor, every complex computer board requires this absolutely irreplaceable metal to prevent catastrophic failure. And consider the bleeding edge of the AI and tech infrastructure boom. The absolutely massive, power-hungry data centers required to power the artificial intelligence revolution are incredibly dependent on silver for thermal management and flawless electrical conductivity. Silver is, by the laws of physics, the most electrically and thermally conductive element on the entire periodic table. There is no scientific substitute. And yet, for decades, it was priced so incredibly cheaply by the paper futures markets that it was essentially deemed worthless and thrown away in landfills inside millions of old cell phones and computers. It was never deemed economically viable to recycle it. Now, the mathematical chickens have finally come home to roost. The gold to silver ratio, the historical measure of how many ounces of silver it takes to purchase exactly 1 ounce of gold, has been artificially, almost criminally inflated for years. Historically, for thousands of years, it sat naturally at around 15 to 1, representing the ratio at which they are pulled from the Earth's crust. In recent, highly manipulated years, it ballooned past a ridiculous 80 to 1. But as we saw in the violent, explosive surge leading up to and solidifying around March 2026, that historical ratio is now violently and aggressively correcting itself. Silver is finally behaving exactly as it should in a severely supply-starved, high-inflation environment. It is acting like gold on leverage. It is amplifying gold's massive moves. When gold rises, silver absolutely sprints. The industrial demand for silver is completely inelastic. Global manufacturers must buy physical silver regardless of the spot price just to keep their production lines running and avoid bankruptcy. When you combine that desperate, inelastic industrial demand with a sudden, panicked, worldwide rush of retail and institutional investors desperately seeking a monetary safe haven from inflation, you create a perfect, unstoppable financial storm. I assure you, a price of $80, $90, or even the $116 per ounce we saw on March 5th is absolutely not the ceiling for silver. In a world utterly defined by an unpayable $40 trillion sovereign debt and a relentless politically mandated march toward global electrification, it is merely the new, unshakable floor. I want to pause the macroeconomic analysis here for a moment and talk directly to you, not as a financial narrator, not as a market analyst, but as a human being who is watching this devastating history unfold right alongside you. Finance is far too often presented to the public as cold, emotionless mathematics. It is hidden behind complex charts, confusing graphs, moving averages, and sterile percentages. But economics, at its very core, is fundamentally a deep study of human behavior. It is about raw fear, insatiable greed, the desperate instinct for survival, and above all, it is about trust. The monumental surge in gold and silver we are dissecting today is not just some random, interesting market anomaly to be traded for a quick fiat profit. It is a real-time, undeniable measurement of humanity's total, collapsing trust in the institutions that govern us. When you look at a screen and see gold hovering near $5,000 an ounce, you are fundamentally not seeing gold become more valuable. Gold is exactly the same unchanging element it was 1,000 years ago when Roman emperors used it to pay their legions. It is a dense, inert yellow metal. It doesn't yield a quarterly dividend, it doesn't produce an earnings report, and its chemical composition does not change. What you are actually seeing in horrifying real time is the fiat currency utterly collapsing against the unchanging, eternal value of gold. You are literally watching the hard-earned labor of the global middle class evaporate into the ether. Think deeply about the working family that diligently saved $100,000 over the last 10 agonizing years of their lives, truly believing they were doing the right and responsible thing, believing they were securing a safe, comfortable future for their children. Because of the insidious stealth tax of inflation and the reckless debasement of the currency by unelected central bankers, that hard-saved $100,000 now buys a tiny, miserable fraction of the food, the energy, and the housing it could have easily bought just a decade ago. Their finite time on this earth, their physical energy, their blood, sweat, and tears, it has all been legally stolen by a corrupt financial system that casually prints trillions of dollars out of thin air to fund endless overseas wars and to service completely unpayable debts incurred by politicians long gone. This is the true, hidden human tragedy of the fiat currency experiment. It violently punishes the diligent savers. It brutally penalizes the financially responsible. It forces everyday, hardworking people to become panicked day traders and risky speculators just to keep their heads barely above water as the cost of living skyrockets around them. The people who are aggressively buying gold and silver right now are not greedy speculators looking for a quick, massive tech stock-style return. They are everyday individuals who have finally woken up to the harsh reality of the financial matrix. They are consciously taking their hard-earned wealth entirely off the fragile digital grid. They are exchanging an empty, broken promise issued by a mathematically bankrupt government for a tangible asset forged in the immense heat of a dying star. When you hold a 1-ounce silver coin in the palm of your hand, you hold something real. You hold an asset that actively required heavy mining machinery, thousands of gallons of diesel fuel, intense human labor, and highly complex metallurgy to pull from the earth and refine. It possesses intrinsic, undeniable scientific value. When you hold a paper fiat dollar or look at a digital digit on a banking app, you hold nothing more than a fragile piece of cotton or a line of code, backed by nothing but the rapidly diminishing faith in a government that is currently $40 trillion in the hole. Ask yourself this deeply important question. Which one of those assets would you truly trust to protect your family's future, your ability to buy food, and your financial dignity in the highly volatile, unpredictable decade that is to come? As we sit in the undeniable reality of May 23, 2026, the path forward is becoming exceptionally clear. The market snapshot of March 5th was a massive, blaring warning siren, but the road ahead of us will be intensely, violently volatile. The deeply entrenched fiat system will absolutely not go quietly into the night. The powers that be will fight tooth and nail to maintain their monopoly on money creation. We will undoubtedly see massive, stomach-churning price swings. We will see the heavily leveraged paper derivative markets utilized to ruthlessly suppress the spot price of precious metals in a desperate, highly coordinated bid to maintain the fading illusion of fiat supremacy. We may even see severe, engineered market pullbacks specifically designed to inflict maximum pain and shake out the weak, fearful hands. If you are a person who constantly watches the daily ticker, you will be entirely consumed by anxiety and fear. However, if you possess the wisdom to watch the macro fundamentals, you will find absolute clarity and peace of mind. You must watch the global central banks. Pay absolutely no attention to what they say in their press conferences. Watch only what they do. They are not stopping their massive gold purchases. Their aggressive actions speak volumes louder than the empty, soothing rhetoric of any Federal Reserve chairman. You must watch the geopolitical energy markets. As long as the critical Strait of Hormuz remains a burning flashpoint of conflict, and as long as global oil remains stubbornly entrenched well above $100 a barrel, massive inflationary pressure will continue to mercilessly crush the global supply chain, destroying the purchasing power of all fiat currencies. And you must deeply understand and watch the physical silver deficit. The massive global green revolution simply cannot physically happen without silver, and the ground currently cannot yield nearly enough of it to satisfy the relentless growing industrial demand. We are currently bearing witness to the violent, unavoidable unwinding of an 80-year global debt supercycle. The massive financial tectonic plates beneath our world are shifting violently, and the resulting economic earthquakes will entirely level paper portfolios that are built on the shifting sand of extreme counterparty risk and endlessly printed paper promises. The historic, undeniable surge we meticulously documented around March 5th was the market flashing bright red, signaling to anyone paying attention that a massive structural paradigm shift has irreversibly occurred. The fundamental rules of the global economic game have permanently changed, and those individuals who refuse or fail to adapt to this new reality will inevitably have their hard-earned wealth silently, legally confiscated through the invisible, insidious hand of hyperinflation. It is your absolute duty and responsibility to educate yourself, to deeply understand the long, unforgiving history of money, and to strategically position yourself and your family far outside the devastating blast radius of a collapsing fiat regime. Physical gold and physical silver are no longer just alternative investments. They are essential, mandatory financial insurance. They are the ultimate peaceful act of rebellion against a corrupt system specifically designed to keep the working class perpetually in debt and struggling to survive. Thank you for taking the time to watch this deep dive into the real, unvarnished state of our global economy. It is heavy, sobering information, but it is absolutely necessary information. Willful ignorance is no longer a viable defense in this brutal market environment. Remember, the mainstream financial media will never, ever tell you this truth. They are entirely owned and funded by the very same massive financial institutions that actively benefit from your lack of understanding and your continued reliance on their failing fiat system. Please subscribe this channel and love you all of my subscribers for your support. If you found deep value and clarity in this documentary, hit the like button, share this vital information immediately with your family and friends who desperately need to wake up to what is happening around them. And let me know in the comments below. Are you actively stacking physical assets outside the system? Or are you still trusting the fragile paper promises of a bankrupt government? John A.G. signing off. Stay vigilant, stay educated, stay incredibly safe, and above all, protect your family's wealth.